sipping chai tea, checking out the cleavage on Schwab TV. Magnificent Jesus, Robin, Randy, Livid Goose, Rich, Nixon, Michelle, and Funky. Stingy with his grades, we got a lot to prove. Patience is the key for Gamma Jamma Move. Opening bell is the sound that makes it go down. Sneaky snake, chart patterns, moving averages, and being in the now. Buying the pullbacks, riding rockets and rips, protecting our assets, pouncing on the dips. Market maker shakeouts, standing our ground, waiting on. Opening bell is the sound that makes it go down. Sneaky snake, chart patterns, moving averages, and being in the now. Being in the now. Jimmy eating salads and sipping chai tea, checking out the cleavage on Schwab TV. Magnificent Jesus, Rob and Randy, Livid Goose, Rich, Nixon, Michelle, and Funky. Stingy with his grades, we got a lot to prove. Patience is the key for Gamma Jamma Moves. Opening bell is the sound that makes it go down. Sneaky
Pure
snake,
water.
chart
Get ready.
patterns, moving averages, and being in the now. Being in the now. Buying the pullbacks, riding rockets and rips, protecting our assets, pouncing on the dips. Market maker shakeouts, standing our ground, waiting on our setups to capture our crown. Stingy with his grades, we got a
About
lot
one more minute,
to prove.
less.
Patience is the key for Gamma Jamma Moves. Opening bell is the sound that makes it go down. Sneaky snake, chart patterns, moving averages, and being in the now.
Welcome, retail traders. I'm Washboardjim, the founder of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I'm going to run through my strategy with you all, try to get you, and I know a lot of you have been following me for a long time and have recently asked, they want to learn more about the strategy, how easy it is to catch knives. The stock's always pulling back. You always get a great opportunity if you like to play the pullback. And I found out in the last 3 years I've been trading for 22 years, so I've been at it quite a bit every single day. One of the first ones to ever start a chat room back in 2007 and 8, and I've been in chat rooms ever since. And so I'm going to talk about this strategy. I've got many strategies. I'm a multi-faceted kind of person. I can trade about any market that it feeds me. But this is a great strategy if you like to scalp, if you like to day trade, and if you like to swing. You just got to look at different time frames. So again, I'm Washboardjim, and it's a pleasure to be here with you, and I hope everybody's having a great day. So this is my ordinary regular chart. And there's a lot of things that I look at when I'm looking at a chart. I like to look for chart patterns. I like to watch my moving averages, and I like to be in the now. I think being in the now is the most important part of it. Once you're established and you know, you get that feeling which way the market's going to go, or if we're in a bear market or a bull market. We've been in a bull market for a very long time, for almost 4 years. And I say that because I look at my moving averages, and that tells me the fact. As long as we stay above that 200 SMA and EMA, we're in a bull market. If we go below it, then we become in a bear market. But every market has a pullback, and that's what happened during the Biden administration back in 2022 when we had the 40% pullback. We had one back during the Obama years, a 50% pullback. And then we've had a little bitty one here for about a couple months under Trump when he first got elected. So there's been a lot of negativity out there, so you got to be in the now. And sometimes I'm the devil advocate of being in the now, because I think a lot of these fat cats, these institutional traders, they're swing traders, and they scalp, but they have a different kind of philosophy about trading, and I catch them all the time in the wrong spot, calling out breakouts on maybe a triple top or a double top. So first thing we're going to talk about is chart patterns. Then we're going to go into moving averages. And then I'm going to show you how to use them both when I'm trading stocks. But being in the now is the third part of the strategy. And you really got to think what kind of market, you got to listen to the news. All we've heard is bash this, bash that, bash the economy, and we've done nothing but had a small pullback and then big bounce. And then we had another one because of this Iran deal. And I've been telling people not to worry about it. I've seen times a whole lot worse, and I've been emphatic about it for the last couple of weeks, trying to get people into the trade because we had one heck of a run, probably one of the biggest runs I've ever seen since I've been trading in the market. In a 3-week period. It's got the biggest candlesticks, as you can see over here at the left. So this brings me to chart patterns. And we're going to talk about chart patterns right now. I want you to copy and paste this. Copy and paste that and memorize all these patterns. You have continuation patterns to the downside. You have continuation patterns to the upside. You have reversal patterns to the downside, then you have reversal patterns to the upside. Continuation patterns mean you're going in a downtrend and you hit a flag and then it just keeps on going down. Continuation patterns to the upside is when you have bullish flags that are coming out when you're in an uptrend. Sometimes when you're going in a downtrend, you could have an automatic reversal into an upward trend continuation pattern. And I'm really familiar with all these patterns, and there's going to be one more on here that I'm going to show you that's not on this thing that I've really discovered in the last 3 years That's really saved me and got me in some real good trades, especially if you watch me live. And I'm live on YouTube every day until I get ready to retire. Then we have what you call the bearish reversal patterns, and we have the bullish reversal patterns. So on the continuation to a downtrend, and sometimes they'll surprise you. They're not always, depends on where you are at the time of day it is. You got to be familiar about the day. If you sit there and you just kind of ask yourself, what time is it? The first hour and a half of the day, I'm doing scalping trades. The best momentum is in the first hour and a half of the day. You can get 2 or 3 trades out of it and be done with the day. That's when you have the most volume, you have the most action, and just beautiful time to be trading. And then you have what you call, after 10:30, 11 o'clock Eastern time, you have what I call my lunch break, to where charts start to form patterns. You have the candlestick patterns working for you at first. Then you have the chart patterns coming in a little bit later, and they're able, you got more volume, more time, and they start forming patterns. And then my worst time to trade is right around 2 o'clock Eastern time. My accuracy drops 30-40%. So I'm not as eager to trade during that period. I'm usually playing a song or playing music, trying to unwind a little bit, still watching the market just in case I see some news pop up. You got to keep your eye on the news. I've always got my news on my chart so I can see it pop up if something that I need to know real fast. And then I've got what you call the reversal patterns to the upside. We have so I'm going to go through all these. We have a descending triangle. Now, descending triangles here lately have been bouncing up. So, you just got to watch to see if they break that top line, that resistance line on top. And then I'm going to teach you about how to count to 3. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. I know it sounds kind of corny, but if you watch me, you'll see every time I'm counting to 3 and 4, man, and I'm making these trades because that's the sweet spot of any pattern, just like a baseball bat. That's what I compare it to. You could, baseball bat, you go about 3/4 up the bat, there's a sweet spot where you hit that spot right there on the bat, your ball has a better direction and can hit farther. And that's the same thing with these with these chart patterns. As you can see, we've got 1, 2, 3, 1, 2, 3, 4, 1, 2, 3, 4. Everything comes in threes. And even some of the candlestick patterns that I trade, like the 3 black crows, the 3 white soldiers, the triple bottoms, triple tops. So descending continuation pattern can trick you sometimes. This is definitely a bear flag. A lot of people misuse it as a bull flag, but it's a bear flag. You can trade within the flag itself, but be cautious if you're in a downtrend and you all of a sudden start to have a flag show up. Same as the falling wedge. They call this a rising wedge. This is a bearish wedge. You're going in a downtrend. This could also break out to the upside. So these are kind of tricky. Symmetrical flag. This is definitely a bear flag, and then one right next to it is a bull flag of the symmetrical flag. So then you have the bullish wedge. It's almost like a symmetrical flag. You're going in an uptrend. Then you have what you call the bull flag, which I call out quite a bit. A lot of people think you're going to fall with this kind of flag, but actually it's a bear flag, bull flag that could go up. One of my favorites that I used to trade a lot when I first started trading was the ascending triangle. That's one right there. Then I talk about how to trade the head and shoulders. I've got a couple tricks up my sleeve when it comes to the head and shoulders. I'll try to share it with you if we see one. We also have a rising wedge. We have the double top. Now these are all reversal patterns. You think they're going up, but you got to be careful with them. Double top, triple top. Anytime you see a triple top, you want to get out of that trade. Wait for the pullback, see if it retests, and there comes your 4, and they might break out on that number 4. But definitely you want to sell if you're looking at a yearly or a weekly or a daily or an hour time frame, you want to be very careful with that triple top. And then you got one of my favorite patterns. All these are my favorite ones that I've been trading here lately on this downtrend, and that's called the inverse head and shoulders. One of my favorite patterns. There's a trick to this one too. I'll try to show it to you when we come up to it, if I see it in a chart. Then we have what you call the fallen wedge, which now all these patterns will be working with a good hard sell-off. So I'm going to show you what a snake is. Then we got a double bottom and a triple bottom. Usually I'm out of these trades when I'm looking at that. So copy and paste that. Google bullish and bearish reversal patterns. And I want to say hello to a few people. Hello, Czar. Hello, Belly. Hello, June. So we're going to go ahead and there's 3 white soldiers right there. This is a pattern that I've been talking about a lot. And we'll talk about that here in a second. But that's, to me, we're going to consolidate on that 3rd soldier. Learn, when you're looking at these candlesticks, and we're talking about soldiers or anything that's going down, you want to keep an eye on the reversal. You want to keep an eye on these candlesticks that start to move in a different direction and learn them. Like right here, we got the bearish engulfing candle with 3 black crows. 3 black crows, we have a tweezer bottom, and right after it, we have 3 white soldiers, which indicates maybe you want to get out of the trade. We have what you call morning star. We have the ascending triangle. Bullish breakout, 3 white soldiers. Get out of that trade. You could have a continuation to the upside. Then we have the bearish rejection. We have a tweezer top. Now I'm using the bodies of the candles. I'm going to show you another trick besides using the wicks. The wicks are a confirmation to me. Make sure you got your pencil and paper out, and if I'm talking too fast, I got a lot to go through. I'll slow down for you. We have a tweezer bottom with 3 black crows and 3 white soldiers. 3 minutes, if you can recognize that pattern. I have this on a 1-minute time frame, or you could use any time frame. It depends on what kind of swing, what kind of trader you are. If you're a swing trader, use the yearly, the daily, and the hour. If you're a scalper and you want to get into a trade, maybe on the swing or something, use the 15-minute, 5-minute, and the 1-minute. I have a bunch of time frames. I have the 4-hour. I have, just depends on what kind of mood I'm in and what I'm looking at. But I want to be in the now. If I'm in a pullback and all I'm hearing is a bunch of bearish crap, I want to see where all the supports are on 100 on my moving averages on a bigger time frame, and that could save me a lot of trouble. We have what you call the 3 red crows. I've already talked about them. They're calling them red. I call them black. That's what they're called, but that's probably politically correct. But then you'd be picking on the Indians, so I don't know if that's a good idea or not. You got the morning star. Now these here are candlesticks. When you're in a downtrend, and it breaks out of, I'm going to show you what I'm talking about here in a second. In fact, I might show you right now. So we've got a little pullback right here. We got a little pullback right at open. So I'm going to take my little thing. I got my tools right over here to the right. I use a mirror trade. And I'm going to draw me a snake. I'm going to draw me a trend line. Now I could bring it up here, and I could call that a head and shoulders. But I want to try to get these all together. So what I'm saying is, we had a breakout. We broke out of that channel, that downward channel off the 100 EMA. Once we broke out of that flag, don't take that trade yet. You might get caught. So we led out with 3 white soldiers. Then we came back down again. So this time we landed off the 63. We're kind of testing the waters. We got a double top. Then all of a sudden we come into a double bottom, back to that double bottom off that 100. So this is the trick when you're playing a double bottom. You could have a straight across double bottom. And then you could have a little lower double bottom. The higher low, when you're getting a double, and I'm using the bodies. Pay close attention to this. If you use the wicks, you would probably not want to take the trade. But if you use the bodies, they line up a lot better. They line up a lot better. Now, as we start to break out of this snake here, I started noticing the difference in the candles. Every one of these 3 candles are bullish. That's an inverted hammer. That's a spinning top. And that's another inverted hammer. So all 3 of them candles are telling me that we could have us a reversal in the market. Then when we break out of the flag, I got 3 white soldiers, which is telling me we could have a continuation in that pattern. So I'm getting excited. I know I'm not in the trade, but I know, okay, this is telling me that this market could be having a good breakout here any moment. So I'm waiting for my pattern. I got to look for some kind of pattern that comes out of this trade right here. And once that pattern is established, I'm going to take the trade. So I finally pulled back to the 100 again. We got a spinning top, we got a little hammer, and we got a tweezer bottom with the biggest wick on the bottom, which means that could be bullish. And I'm excited because I know that we've had already 3 white soldiers that could lead me into a higher gain. So I'm getting bullish. Boom, there she takes off. So I jumped in the trade with a double bottom, higher low. And this is an inverse head and shoulders, which is also bullish at the same time. So I'm memorizing these patterns. And then I got another trick up my sleeve. If you can count to 3, you can trade with me. So I take the body of that candle right there and run it up, and I count to 3. 1, 2, 3, triple top, boom. And she breaks out. She's leading out with another 3 white soldiers, which is telling me that this is going to be a good run, and I'm going to try to find an exit idea when I take it. So I run it up to the 63 and I get out of the trade. That's the 63 EMA. So I'm going to give you my moving averages right now, and we're going to talk about them. And then you see we retested that 63, or that might not be the 63. Let me see here. No, that ain't the 63. Let's see what this is. Oh, okay, I know what that was. That's where I drew that line across. I was looking for a support level. So I'm going to go to a bigger time frame and kind of look back to see if I can find me some kind of... It's all new highs. All new highs. So I'm going to take and run a trend line from this place right here. It's all about drawing trend lines too. That was a resistance. That was a resistance. Now this is on the 15-minute. So it came up and hit that resistance, and then boom. There's your 5-minute. We got a tweezer bottom. It opened on the 5-minute with 3 black crows. So that's another different time frames can give you different strategies. And I've got all my different time frames, so I keep looking at different time frames as I'm looking for my chart patterns and some kind of idea or some other confirmation. I want to have more than 4 confirmations before I take a trade. Or 3 is okay, 4 is great, and 5 is, you know, a no-brainer when I'm looking. So I'm looking at my candlesticks. We had another snake right here. So I want to draw my little line, my little knife in. Using the body of the candle, if I can get it on there, and running it to the next body and extending it out. Come on, you idiot. Wow. Being stubborn. So we have another breakout again with 3 white soldiers. And then it comes back down and has another knife. So that trade wasn't doable. But now we're forming that pattern that I'm talking about. This is called a fallen wedge. So maybe this was the trade that I sat in for a little while. So this is called a fallen wedge. And again, 1, 2, 3, 1, 2. The wicks don't count. They're confirmations. 3. Boom, up to the 200 and out of the trade. Maybe take it, you got the breakout, pull back, and then you take the trade off that pullback. Every time you break out of that channel, you might have a retest. That's where a lot of people get a little bit. Everything retest. Every breakout retest. So we had that real retest right here at the end of the day. We've got the 3 white soldiers, so we know we're bullish. We came back and retested, and then we got this candlestick. That's a doji. That's a hammer. So you want to keep an eye on them candlesticks and memorize them and look for the ones that are bearish and look for the ones that are bullish. We came back and retested that trend line and then boom, up to the 200 and out of the trade. I used the moving averages as support levels and resistance levels. Here's another trade idea. And when the 9 crosses the 21, that means it's bullish. And many times you can get in that trade on that pullback, you're still above the 9, and that'll keep you in the trade until you finally break below it. But as you can see, we hit the 200 right up here, and that was an exit idea. The candles started changing. And then we bounce off the 63 for another trade maybe at the end of the day. Sometimes these things can add up pretty good, especially if you're trading a lotto on the SPX. So here's an example right here of a trade. You got a little pullback here. This is called a fallen wedge. I'm using the 1 minute. Man, this thing's not being nice to me. I didn't have it on the mat. So we got another fallen wedge right here. Breakout, pull back to a double bottom. You're in the trade. You get out of a double top or an inverse head and shoulder or a head and shoulders on the 1 minute. So you got a fallen wedge. 1, 2, 3. She breaks out, pulls back to a double bottom. Tweezer bottom on the double bottom. And boom, back up. Now that was after hours, I think. Same thing what happened here. You had a double bottom, you had the breakout, pull back. This traded what you call an M with a double top. Then it came back to the double bottom on the 1 minute. Now, if you can, people that trade the 1 minute can get in more trades than a person that trades the 5 minute. It might be easier to see on your eyes if all you want to do is take one trade a day and look for that right one. But we'll go to a 5 minute. We had a real great week. This is about being in the now. I've been very bullish in this market. I've been very bullish in this market since Trump's been elected, and we've had one heck of a run. But there's a lot of Trump drain syndrome out there that fogs your mind. So you really got to pay attention to what news you're listening to and who you're listening to. Most of it's BS. I've seen times a whole lot worse than what we're in right now. And I think what's going on now is probably the best thing I've seen in my whole entire life. My 22 years of trading. But you only know that if you've been around so long. So we had a big old hammer right here. That big old hammer right there is telling me that we're very bullish in this market. So right at open, if I can get this on the 1 minute, where was it? Very bullish candle. You can see as we start to break out, then we have that little spinning top for a correction right at open, telling me that it's going to consolidate. Then we have a hammer, and we stayed above the 9. So I probably would have took that trade too, probably did. Stayed above the 9 all that time, and then it started giving up. Tweezer bottom, take it up to the upside. Tweezer tops and tweezer bottoms. You get a tweezer top, you might have a pullback. Tweezer top might be a good exit idea. Tweezer bottoms might be a good entry idea. So that's just another candlestick pattern to look at. So it's all about candlesticks. It's all about chart patterns. Memorize them chart patterns. Memorize the candlesticks. And you don't see, once you start noticing them, you'll start recognizing it's tweezer bottom, that's a hammer, that's a hammer. That's on a 5 minute. So I want to keep an eye, like the morning star. I'm going to memorize what a morning star is. To me, it's just a spinning top. But right after the 3 black crows that come in, and you can see these on any time frame. You just might see a lot more of them on a 1 minute. If you see them on a 5 minute or a 15 minute or an hour, that could be a nice little day trade, or you could be very bullish to scalp, or might even swing the stock. 3 white soldiers, I'm always out of the trade. I'm looking for the reversal candle to the downside. That's called a bullish rejection. And it usually happens after after 3, look at every one of these almost. You've had some kind of rejection with the 3 white soldier, 3 green straight candles in a row. 3 straight candles in a row. Rising wedge, it pulled back and retest. You have things that retest. Almost every breakout retest. Let's say you're at this support right here. You finally broke out. You don't jump into the trade right there. You wait for the retest and then jump into the trade. Always remember about the retest. Let's say this was a resistance level at one time, a trend line that came down, and it broke out, came back and retested that trend line, then you had another breakout. But always keep on them. It's very important as you start to learn and you're breaking down or you're coming out of that snake, is to watch them reversal candles come into play. And before you know it, within a month or so, you'll have them memorized and you'll start to get the feeling, okay, it's retested my old trend line. We got a tweezer bottom. I'm going to take this trade. We got an inverted hammer down here at the bottom. It's called a morning star. Boom! She breaks out, and you hit a double top, or you hit a triple top, or you hit a shoulder line of a Head and Shoulders. So we're going to go through some charts. First, we're going to talk about the moving averages. If you got a pencil and paper, I'll tell you what color mine are. First one on the list, let's go, yeah, first one on the list is going to be the 21 EMA. I got it in white. Each one of these moving averages is going to give you an idea if you're bullish or bearish in the market. So the 21 EMA, I have white, and these are good moving averages. Took me 22 years to come up with them. We have the EMA 200 in a gold line. We have the 9 EMA in a translucent blue. We have the 63 EMA in the red. We have the 50 SMA in the green. Excuse me. The 200 EMA is the dotted yellow. Go back to the 200 EMA is the dotted yellow. And then the simple moving average, the 200, is the solid gold. Then I also have the 100 EMA in the stripe pink. Then I include my RSI. So that's the white one is the 21 EMA. The 200 EMA is the spotted yellow. The 9 is translucent blue EMA. The 63 EMA is the red one. The 50 SMA is the green one. The simple moving average of the 200 is the solid gold. And then we have the 100 EMA, which is the pink. You can copy and paste that if you want. So each one of these moving averages gives me an idea how the market is. I use the 9 EMA to keep me in the trade. Some people use the 5, some use the 15. I use the 9. The 21 keeps me in the trade. Many times you'll have a squeeze where the 21 and the 9 kind of come together. And then I'm calling out a squeeze and a breakout by this time. We had a little bitty pullback, but it finally broke out of that 9. Let's keep using the 5 minute. Well, let's go down to the 1 minute. So this here pattern right here, this is called the snake breakout pullback into a fallen wedge. I know we're getting ready to squeeze because we're in the sweet spot of the bat. If you can count to 3, you can trade with me. And if you can count to 4, you might make a little bit more. So we're getting ready to take this trade. It's tightening up. The two bands are tightening up together, which is telling me it's getting closer to the squeeze. Sometimes it'll get right at the end of that triangle and be ready to break out. But this is the sweet spot. This is where you want it to break. If it keeps going like this, it might take all frickin' day to take that trade, and then it might be too late. It might be the end of the day and never do break out. So once we count to 3, and I've over and over again. People that watch me know that I'm not kidding about this 1, 2, 3 stuff. It's so simple. It's so easy. As once you understand, there's nobody out there that'll talk about this setup with the 1, 2, 3 and 1, 2, 3, 4. So we break out at the sweet spot, and then we run up to the 200. So the 200 SMA is a resistance. Now, before we had this breakout, we had the 9 cross the 21, which is telling me that's another way to use these moving averages. When the 9 EMA crosses up the 21, that's a bullish signal. And we let out with 3 white soldiers, actually 4. And then it came back and retested that resistance line with a hammer. And then we had some more. We just run up and hit the 200 and we're out of the trade. So within 7 minutes, 6 minutes, you're trading the SPX maybe, you could have made $100 a contract or $50 a contract, depending on the price, how many you would buy. My average, it depends on the price. You know, if I've got a stock that's, my limit on any trade is $1,500. If I go over 1,500, I'm in trouble and I'm working my way out of the trade. I do something that a lot of people have been told not to do, and that's to cost average down. I've been in hundreds of trades where I took a loss, and 15, 20 minutes later, I could have made a killing because I used stop losses. So I stopped using it finally, after 18 years of losing money that I could have made and counting up how many odds, 49 times out of that 50, I would have took a loss, but them other 49 times, I would have took a win if I didn't use that stop loss. I'm not asking you to do that one bit. You need to learn chart patterns and get into the groove. If you're a small account, keep using stop losses. But if you have a little extra money and you've been around and you notice how many times you've lost that you could have won, it'll start sinking in. But as a beginner, you don't want to do that. You got to learn. You got to learn. And you see it for yourself. And you probably already saw it. If you use a stop loss and then minutes later, you could have been in the green. I'm not sure if you recognize that or not. This is also being recorded, so you can share it later on if you like. So the 9 crosses the 21 and stays bullish all the way up to the 200. Now I'm using the 63 as a support line. So when it came back, we ricocheted off that 63 for 7 minutes. Then we run it back up to the 200 again. That's on the 1 minute time frame. SPX is one that I trade every day. I trade these two every day because they're almost always a winner for me. There's not much news. All you got to know is if the market's bullish or bearish to take these trades. So I'm going to go to the first. We'll start, and I'm going to show you an institutional trade, how the institutional traders trade this stock when they know that we're into a reversal. Back in 2022, we had the Ukraine war in Russia. We were having supply chain issues. America had a war on itself with the oil and energy. Gasoline jumped up to $5 a gallon where I live. This was during the Biden regime. Things were a lot worse. Had no toilet paper. Women had no tampons. Baby food shortages. All kinds of stuff was going on in 2022. So I'm sitting here talking. I've already got 15, 18, 20 years experience, 18 years experience in the market. So I've seen times a whole lot worse, but that was pretty bad. So I'll go up to and I'm going to show you something else too after this. This will really catch your eye. We've got the weekly time frame, and I'm going to go back 5 years. So I'm beating on my desk. I mean hard. People are scared to death back in 2022. Didn't want to take them any trades. They were losing money because they kept holding their stocks. And I kept telling people from the very beginning of 2022 that we were going to have a bad year because we were starting to hit supply issues, and we had a war on energy of our own country punishing us and telling everybody else in the world to go ahead and drill oil. We were giving oil to China out of our reserves. Our oil reserves were down. And we had all them wars going on. So an institutional trader would notice that we were at a solid support because we're looking at the 200 EMA and the SMA. So I wrote a song back in September, would be the month that you would never forget. You would always remember. And it bounced up off the 200 SMA. Institutional traders look for this moving average. They look at the 50, they look at the 21 SMA, and they look at the 200 SMA. And they use them as resistance and support levels. So we bounced off the 200 EMA and had a nice run up to the 50 back in 2022. If you were a swing trader, that would have been a great setup for you. And I jumped in long, and I made a ton of money. And I begged everybody. Tesla was at 110. Boeing, it was 120. Microsoft was 145, something like that, 130. Facebook was at 89. And I'm telling people, jump in these trades. This is the spot. This is an institutional spot where they're going to reverse the market. And I couldn't get anybody. They were saying it back then, but I think they stopped saying it back then. They used to say it all the time before the institutional traders started trading. The retail traders started trading the market. So we had 3 black crows, which I call out all the time if you're familiar with me. 3 black crows with an inverted hammer and a spinning top. Boom, right off the 200. So anytime you're trading stocks and you come across that 200 on the weekly or the daily time frame, or even the 50, depends on what time frame you're using, that could be a good solid resistance and support level. We're bullish because we're above the 200 still. If we would have been real bearish, they would have probably shorted this market. But then the 200 becomes resistance. Then we come up here off the one and we hit the 50. So now we've established a resistance level. We came back down. 3 black soldiers up, scalped it. 3 black crows, run it back up to the 50, or even to the 9, or however you want to trade it. But I went long. Look what happened after I went long. We came back and hit the 100 right here, and that was still another sell-off the next year under Biden, and that was just as bad or worse than the one we've just had here just recently. So when I say that I've seen market a whole lot worse, I'm telling you, I've seen it a whole lot worse. I've seen it worser than this. And that was a bad year, 2022, but 2007, 8, 11, under Obama, we had some real bad sell-offs. They were a lot worse than what these are, what we had here lately. This was Trump drain syndrome, so I knew we were going to recover from that real fast. And we again bounced off the 200 EMA and SMA. And I called that out. I don't think too many people heard me. Before you know it, we're back at a double top. Same thing happened here. So this last sell-off was about a month and a week. It wasn't that long at all. It was real fast, and people were freaking out. And I'm saying, calm down, it's nothing. But they were relating the Iran thing deal, and I'm glad it's happening myself. It shows our strength, for one. It gets rid of a terrorist organization, for 2. that's been terrorizing the world for over 50 years, worse than Hitler, been genocides that so many I can't count. We bounced off the 63, then we run into the 3 white soldiers. So now I'm looking at Candlesticks telling me, okay, we're going to consolidate. But I'm real bullish. I'm more bullish than I've ever been in my life. In 22 years. And I tried to emphasize that back when this happened. So if you pull up the daily, all of a sudden on the daily we become bearish, but on that weekly we're still bullish because we're above the 200 and we're above the 63. So we had 3 black crows, and the communication that the war was going to end, maybe, or they were communicating finally, and everything was blown up. I started getting very bullish in this market. I was bearish waiting for that news to hit. And once they announced it, we got the confirmation, we had a big gap up. So I was very, very bullish when I called this trade out. Now I'm a little bit bearish because we have 3 white soldiers, and I know they consolidate. So I'm using my moving averages as I'm going up. We had the 21, the 9 and the 21 crossover here. When they cross down, when the 9 crosses down the 21 and starts respecting that 9, you all of a sudden you don't want to, that's an exit idea. If you jump in the trade down here and you have a run, you want to get out at the 9 because that's been your resistance line. So when you're trading, if it's the 1 minute, the 5 minute, the 15 minute, the hour, the weekly, the daily, you want to watch what bodies of the candles hits what moving average, and that'll be your resistance for the longest time until it breaks it. Then once it breaks it, it becomes support. So let's say you got in this trade, any of these bottoms down here. This is a big old snake. You got a big old sell-off. So I'm trading inside the snake. I know that this is my resistance level, and I know I need to get out of that trade every time it hits that. I'm using the daily. I'm a swing trader. I can get in now these trades within 3 days, 2 days. I'm balancing off the pivot point. A pivot point is a place in the chart or the pattern that tells you if you're at resistance, it has to make up its mind. It's either going to fall down in support or it's going to break out of resistance. So we held the resistance level inside this here channel, which is called a snake, and we established a resistance level. So I know that that's resistance. Anything below it, I want to trade it as support. I really don't want to swing it until we break that pivot point. That's the mastermind of determining what is support and what is resistance. Hi, Jimmy. The 200 EMA and SMA, 50 SMA, 21. I use the EMAs. Mix them up. Add the SMAs to it. Jim, and have you noticed how no one is getting the flu since Joe left? Oh yeah. Especially the chickens. I was paying $12 for 18 eggs. Now I'm paying $2.99. And food costs have gone down tremendously, except the meats. So we had the breakout and then the pullback. After you have the retest, we hit the 21. And then that was time to take the trade. Boom. Boom. I'm bullish. The news has come in. I'm in the now. The killing has stopped for now. Ceasefire. So I'm really, really bullish now. Each one of these are daily. So this is when the ceasefire took place and we broke out of that channel. I became bullish. Once we broke the 200, we were off to the races. Now we're at an all-time high. I go back and I look at that weekly, and that tells me that we hit a resistance because we have 3 white soldiers out of that snake. I want to be careful now next week. I don't want to, unless I'm going to be catching pullbacks and catching them snakes that come out of the pullback. So we're going to go through a few stocks. Let me see if there's a lot of stuff. But once you pick up on the basics and you know how to use these moving averages, use them as support levels and resistance levels. Keep in mind that the SMAs are a slow moving average. They're for swing traders. They get you in trades. And the EMAs are fast action, price, where you have a faster action in the candlesticks or in the moving averages. A lot of scalpers and day traders use them. So I have a mixture of both, and I can use both of them on a daily basis. I could use that SMA, have a big old knife come in and stop right at the SMA, 200 SMA, and take the trade, because I know that that's the bottom line support. That's the, that's got to hold. And if I get a confirmation that if you listen to me, I call these trades out all the time off these 3 moving averages. This one's basically your first support, your second, and your third. And I'm using them on 1 minute. So let's look at another one. Let's get my watch list up. So my setup looks like this. This is my main page that I have on another screen. I have my symbols. I can run through my symbols here. I have all kinds of different kind of scans set up. I mean, I've been doing this for a very long time. I used to be a penny trader, like 1 to 50 cents, 3 million descending. If I was looking for a pullback and I recognize one of these tickers up here, that's just 1 to 0.1 to 50 cents. That's descending scan. I just have all kinds of scans up here. %, breakout scans. We had Mr. on here. So let's say, I was wanting to trade Mr. We had a huge breakout. And I called this thing out first thing in the morning. This chart here is called the 9 EMA cloud, 9 and 21. The 9's up here and the 21's down here. And I have a few other moving averages on here to kind of keep me in the trade. That's the 1 minute. So we had a breakout, 3 white soldiers with an inverted hammer. That's telling me that this thing might reverse because the wick is on the upside. The wick is on the downside. You see the difference in the two? This is bullish. This is bearish. It means the sellers got out of the trade right after 3 white soldiers. 3 green candles, you got to get out of that trade. Then you had 3 black crows, and there you go again with another hammer. And you're still above the 21. Another breakout. Inverted hammer, and then another doji. These are kind of like dojis. But keep an eye when it starts to reverse. That's where you really got to watch the mark. As it's coming down, start recognize what a bullish and bearish candle is. And then you could this here is a simple trade. I call this trade out every day. I'm trading the SPX. This thing dropped down with 3 black crows, and I got this hammer. So I take the trade off the tweezer bottom. I know I'm bullish. Then I get out at the third soldier at a double top. This is a tweezer top, telling you that it's bearish. That's an inverted hammer telling you that we could have a pullback with the wick on the top part. Yeah, the wicks are confirmations to me. I really don't use the wicks to chart. I use the bodies of the candle. So if I was to draw this trend line, I'd be using them bodies. Come on. That's called a bull flag. You're coming up. You go back to my chart pattern. Where the hell are you? There it is. You're going up and you're creating a bull flag. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. But we came up on a quad top and broke out. We didn't break out of the triple top. 1, 2, 3. 1, 2, 3, 4. Boom. Nobody will tell you that. And you'd be later you'd be coming back thanking me. So that's a bull flag. 1, 2, 3 with a reversal candle. Boom. Out with a double top. Just like that. You got your scalp of the day. And if this was the SPX and you bought it at maybe $1 or $2 and it runs up and you get 5 of them, you spend $1,000 and it runs up $1, you made 50% in 3 minutes. That's how good the SPX is. That's why I've made more money on the SPX in the last 3 years than I have the whole 19 years that I traded. A lot of people trade it. A lot of people trade that, the IWM, and the SPY, because they're so easy to trade. You don't have news interfering with it. You don't have institutional investors downgrading it. You just have a lot more opportunity of I think. I hate getting a downgrade when they double downgrade something and I'm real bullish on something. They're double downgrading it because they missed a trade probably and they want to buy the dip. And that's what I was telling everybody. For 4 months, for a year, all we heard about how the market sucked and that how we were overbought in AI. And I mean, I've been through the .com era, I've been through the EV era, I've been through all kinds of sector breakouts. But I'm a tech guy, so I'm a technical trader. I trade tech stocks because I think that's the new wave. And this is a new revolution. And if you don't get on the ball, you could be unemployed. So you got to figure out how you're going to work with this AI. Call centers are going down, I get 10, 15 prank calls every day of a call center calling me up that's AI. I just joke around with them because I don't want nothing to do with them. But you got to be in the now. We had a nice little breakout. Now these here are called orbs. We've got a chart set up. Use them as support and resistance levels. So you got to watch them candles when they start to reverse, and that can give you some kind of clue. That's very important to learn. When the stock breaks out, and you took the trade and you did real good on it, I want you to go back and look at every trade you took and see why it broke out and study what pattern and dig in it. I mean, there's times where I take a trade and I go back and look at it. I said, I didn't see that, man. I would have definitely loaded up more if I had another confirmation. So zoom out when you're in doubt. Triple bottom. 1, 2, 3. Boom. Breaks on out. I've been very bullish in this market. So I'm sitting here and I'm looking for another snake. I've got a couple of them in here. A couple of snakes. They're sell-offs. So I'm watching this one right here. I go ahead and I draw it out. I want to line it up as best as I can with them candles, trade a trend line. See how pretty that is? It's weird how symmetrical these can be. And once you realize that, so we had, oh, what is that? What the hell is that? That's a big old bull flag right there. Big old bull candle. That's a hammer. I'm ready, man. I'm excited about this trade. We haven't broke out yet. We haven't broke out yet. 1, 2, 3, 4 times. And then the 5th time it finally broke. And we only had 2 touches at the bottom. So we haven't broke out of that pattern yet. Now we started to break out. Jim, should I take the trade? Nope. Wait for a good pullback and see if it retests that trend line. So as I'm drawing it up, Jimmy. So as I'm drawing it up, I start to see the double bottom appear. We had a higher low right here. So I want to draw that trend line in there. And I decided to take the trade on the double bottom. And I'm looking at the candles. We had an inverted, and then we have a doji. Those are both bullish candlesticks. Boom, she takes off. And I go in there and I cook lunch. I sell the stock at a double top. I take a break. Don't overtrade. Don't get in one trade and try to jump right into another. Just take a little break. Let the market play out. So I'm in the kitchen whipping up me a hamburger on my George Foreman. I just took this trade and run it up here to a resistance level and got out of it. Then I come back and I say, and we're pulling back. And I say, Jim, we're about to have a triple bottom. I said, what do you mean? Yeah, that snake earlier, we came back and hit that same damn support level. What was a double bottom now becomes a triple bottom. So I do the same thing over again. I want to draw that pattern in. Got my snake. I hit a triple bottom. Now I'm excited. Now I'm really excited. I hit a triple bottom. It's at the end of that snake. I want to see what kind of candlesticks we got here. Nothing to really get me twisted, but I know that we had a triple bottom. And then off that triple bottom, we broke out, pulled back, boom, run it back up. Now that could have continued all the way up to the 200. But I'm going to call it a double top out of that snake. There's another double bottom right there in case you missed that one there. That triple bottom. Run it up, get out of the trade, or see what happens. As long as you stay above that resistance line, you're still bullish, and you get a little bit more out of it. Maybe after the next 3 soldiers. That's when you're scalping on a 1 minute. And you could see these patterns on a 5 minute. So I'm going to tell you why I was so relaxed into this new year. I got all kinds of time frames in here. The 4 minute, the 2 minute, 4 hour, 2 hour, 1 hour, 30 minute, 15 minute, 10 minute, 5 minute, 2 minute, 3 minute. I also got the yearly. I got the monthly. I got the tick. So I'm going to go to the yearly time frame. Notice anything in here that looks a little bit different? I'm using candlestick patterns. So we had, let's see how far back I can go with this. I got 20 years. We'll go indefinitely. This was back, goes all the way back to 93. This is when I had an art gallery and I started learning stocks during the Clinton years. Then we had 3 black crows, another 5 candles, just like the previous one. And then Obama became president. We had the big sell-off in 2008 where we lost 50% of the market. Gasoline was at $5 a gallon, $7 in California, $8 in California. We're having a food crisis. Not that bad, but we definitely, they blamed the stock market. They blamed real estate. I didn't. I blamed the rhetoric that came out of his mouth. Every speech was about how he hated Wall Street and fat cats and how he's going to distribute wealth. We had 2 years of green years after that, after he started pumping the money into the market. We had another pullback. We had 3 white soldiers, another pullback. 2 white soldiers, another pullback. 3 white soldiers, another pullback. 3 white soldiers. This is 2022 when we had that was a pretty big pullback. It lost everything it gained before that previous year. Then 3 white soldiers. So I thought we were going to consolidate. And we did. We pulled back. And then we had this big breakout here in the last 3 weeks. I mean, that was incredible. So now we've got 4 candles up here. So, but you see the repetition. And that kept me at ease. I knew we were going to pull back after this 3rd soldier, and we did. So I was already ready for the pullback, and I didn't think it would be that big. In fact, I had it marked off this wick right here, and we come real close to hitting it. So that's something to keep in mind if you every year you want to pull up that yearly candle and see if there's any kind of repetition going on. So this is my daily setup. I have Squawk Box on. I listen to CNBC in the morning and get all pissed off, and I know I want to trade just what the opposite of they're saying. They're hardly ever right. They're hardly ever right. So I'm playing the devil's advocate. I've spoke to Jim Cramer before. Almost got a job with an institution for trading about 8-9 years ago. They called me and called me and called me, and I kept telling them no, because they heard about me through the grapevine. I put my message center up here where I set my alerts. I set alerts on all my trades. And I hear ding ding, I'll go and look at, and I got different sounds of dings where I know that this is an important alert and this is not an important alert. Then I have my watch list. It's very important that you have a good watch list. If you're new to trading, make it no more than 10. As you start to develop, add and subtract. Watch list, I use mine by volume and by most mentions. So those are the kind of stocks I like to trade, that have a lot of volume and that are mentioned all the time, over every day, single day. I want to be in the now. So on these channels, they repeat the same stocks over and over and over and over again. And they talk about the upgrades and the downgrades. Schwab is a reliable source. CNBC is more or less a liberal squawk box. Schwab doesn't have politics involved. In my room, I got a little pissed off the last couple of weeks because the politics were getting a little bit too much. And I don't want to hear it. I don't care what rumors or opinions are. I don't care what your opinion is. I'm here to trade stocks and look at the charts. That's my main focus. I've seen times a whole lot worse. I already knew that. That this wasn't going to be nothing. And we had one of the biggest rebounds I've ever seen in my lifetime trading stocks in 22 years. It was incredible. And I tried to tell people, don't worry about that shit. We're getting rid of these terrorists. They've been killing Americans. It's got to stop. So that's all I wanted to know. I didn't think it would disrupt, because we've been digging oil, and we had the same thing with Russia, and we did have a problem back then because we had a president that had a war on oil with us. So, I was very bullish into that pullback, and I was waiting for the right opportunity, and I saw it in advance, and I made some money doing it too. I made more money in the last 3 weeks than I probably have for a good year. And that opportunity don't come up too fast, too often. I think I can name good 6 or 7 times where I've seen that opportunity, and I made money on all 7 times. But it was always short-lived. But this was nothing compared to what I've seen in the past. So I'm very bullish. And first thing I do in the morning is, when I'm trading, is I'll look at the SPY and the SPX, and I'll see how they're set up. This was a perfect trade. Double bottom. Just keep going. I was so bullish. I took stocks last week from $3 to $3,000 in an option, and then have 3 or 4 of them, and you're making $5,000 or $6,000 in one trade with less than $1,000. So I've got my watch list. First thing I do is I go and I look at the red ones. Now, Netflix had earnings, so I have a 1, 2, 3 rule. There goes that 3 again. After earnings and the stock has a bad reaction, I'll wait until the 3rd day after earnings, and I'll see how the market's reacting to that stock, and I might take it and swing it. So that's my 3-day. There's all kinds of rules that you can make up to fit your kind of trading. So we've already had 1 day. We got the big knife. And we got to look for a resistance level. I'm using the bodies of the candles. That's called a megaphone pattern. That's as it goes down. It can go sideways or it can go up. That's called a megaphone. When the mouth is smaller than the lips, the jaw, than the mouth. Some people call it an alligator chart. So I can play in that channel. If it comes down and hits this orb or hits this bottom trend line, I might take it and run it back up to the top of that trend line and play that channel until it decides to start to break out, and then wait for the pullback and take the trade. And that could happen within 2 to 3 days from now, maybe 2. So if it does break out of this channel, I'm going to wait for it to pull back and retest that resistance. I'm always waiting for a retest. I never jump in on a breakout. I never jump in on a triple top. Unless it has been in the now and you know your news. There's only 3 things you need to know. Actually 4. You want to learn them candlesticks. Number 1, chart patterns. If you don't use moving averages, and you have, did you notice I don't have any indicators at all on here, but the orb and the moving averages? I use trend lines. I'm using bodies of the trend line. I'm using the body, and I'm reading the news. I'm just scanning the headlines. I don't actually read the whole damn, unless it's something I really want to read. I just read the headline. And there's so many different headlines about this Iran hummus, whatever you call it. There's mines in the water, and then there's not mines. And then you hear that Iran's helping with the mines, and then they're not helping with the mines. And then it's all blurry news to me. If it don't show up on here, then I'm going to double check it. But you got to be on your toes, you know. You got to keep being in the now. Have a reason to take the trade. Don't just follow a trade blindly, because you're going to leave it blindly and you're going to get hurt. Have a reason to take that trade. Know when you're going to get in it, know when you're going to get out of it before you even take it. Okay, I've got a fallen wedge. I'm going to wait for the squeeze, and then I'm going to jump in the trade. Or I got an inverse head and shoulders on this pullback out of a snake. I got a knife with an inverse head and shoulders. I might take the trade. So I go through my scan. Oracle's on here. Oracle had that huge run. And we're going to pull up the 90-day 1 hour. We broke the 90-day resistance. We're going to pull up, go farther out, pull up the daily. We just hit the 200 EMA. So I'm bearish. I found a resistance. The stock pulled back. The 200 EMA. The 63 was resistance. Then we broke the double top to the 200, and I got out of the trade because that's a resistance level. Pull back, maybe retrace the 63 and jump up and try to break the 200 EMA to the 200 SMA. I pull the 1 minute. We had the big old sell-off, double top, or could have been a head and shoulders. Yep, head and shoulders, which is bearish. So that's a head, that's the right shoulder. Now I recognize that shoulder line. I want to get out of the trade. Say I took it and run it up off these 3 black crows. 1, 2, 3, with a tweezer bottom and a hammer, and jumped in that trade on the 1 minute. Took it out at the double top, or that shoulder line of that head and shoulders. So that's a resistance level. Sometimes they'll come down find support, and then retrace back up and break that right shoulder line. That's the secret that no one will tell you. I'm in this trade. I scalped it and I got out of it because I found the shoulder line of this head and shoulders. That's a resistance. If you go back and look on that chart, head and shoulders is bearish reversal. So they come up and hit that shoulder line. A lot of times they won't tell you this, but if it comes down and retests that neckline, that's the neckline, that's the shoulder line, and that's the head. It could come back and retest that shoulder line, then bounce back up and break that second shoulder to a double top. Just because you think it's bearish doesn't mean it's bearish, but it means you need to get out of the trade on that shoulder unless it has great news. But I always get out. I'll get out and I'll wait, see if it retests that neckline and come up and retest that shoulder. And more times it'll break out the second time than it will the first. The inverse head and shoulders is a trade I call out every single day. It's one of my favorite patterns. Nobody recognizes it. The same thing happens here. If you're going down and you create an inverse head and shoulders and you decide to jump in it, that would be ill-advised. That would be ill-advised. You want to wait for it to break the neckline. And then if it breaks the neckline, it still can come back and retest the neckline. So what I do, when I notice an inverse head and shoulders, and we touch that right shoulder the first time, I'll wait for it to hit the neckline, or even a little bit there, and come back and retest that right shoulder a second time, and then take the trade, and then run it up. And it's bound to break. Most times, especially on a pullback. That's one of my favorite patterns, and the fallen wedge. The double bottom and the triple bottom. These are all my favorite patterns. I'm looking at these patterns when they come out of that big long snake. I'm looking for any of these to tell me what's going to go down. Just because it breaks out of that knife, you've got to wait for it to consolidate and create some kind of pattern or bounce off some kind of moving average. It's a really, really easy, simple trade as long as you have enough patience to follow it through. So we have AMD's been on a roar. This is one that I look at every single day and trade it. All kinds of little patterns in here. We've got what you call a symmetrical pattern. Right out of the gate. This is a flagpole. This is called a pennant flag. It's a symmetrical flag, but it's called a pennant flag. So it comes down, bounces off the orb, and retests, and you've developed a trend line. If you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. 1, 2, 3, 4. Boom! 1, 2. Wick, wick. Higher lows. We're bullish. The body didn't touch that third dip. 1, 2, 3, 4. Boom! You're out of the trade. Had a little retest. Boom. Come back down and retest that old trend line off that flag. There's another scalp to double top, triple top. Out of the trade. Triple top. Using the wick as a confirmation. So he pulled back. You got a double bottom. You're back in the trade to a triple top. You're out of the trade, or a quad if you want to count that. Beautiful chart. Beautiful chart. That's called a pennant flag. Your resistance has been established all the way across the thing here. So every time it dipped, you knew where resistance was to get out of the trade. Bounced off the 200, It's kind of became a pivot point from there on out, that trend line. JP Morgan was in the news. You got what's called a fallen wedge. Hey Jim, I'm watching JP Morgan here and we got a fallen wedge. It's lit out with 3 white soldiers. Man, that thing's gonna run. Boom, baby. 3 white soldiers out of a fallen wedge. That's a no-brainer right there. Then it retested the 200 EMA. These moving averages are perfect. I spent 22 years developing them. And how did I learn them? By learning from people. I picked up the 63. We're out of the snake. We run up and hit the 63. I'm up $700 or $800 on 3 contracts, trading the SPX. I'm out of the trade. I'm done for the day. I spent less than $500. And I got 80%. And do 80% every day for a year and see how rich you become. We bounced off the 200 EMA. Got a double bottom. Boom. Here we go again. Bouncing off the 200. Boom. Bouncing off the 200 SMA. Boom. Bouncing off the 200. Boom. Using the 200 SMA, you'd be surprised that you see it working on a 1-minute time frame. Triple bottom off the 200 EMA. Boom. This pattern here. This has got me in many trades that people were just going, we're knifing. And then all of a sudden I call out a call. Hey, what the hell's wrong with this guy? This is one of my favorite patterns right here in a downtrend. That's called a megaphone. So I got my snake. We hit the 200 and we start to go sideways. And we develop a megaphone pattern. So it comes down and has a higher low off that third one. Boom! If you can count to 3, you can trade with me. 1, 2, 3 with a wick. Here's another snake. If you can count to 3, you can trade with me. Three's a sweet spot. 4 if you want to make a little bit more. So perfect snake right here. So we got the knife. I get a knock on the door. Jim, we're breaking out of the snake. Let me look at it. I'm going to get in now. No. Let's see what kind of pattern forms. So I'm sitting here and we're holding up that resistance line. Hey, Johnny. We just had 3 black crows, buddy, and we're holding that resistance level pretty well. Let's take the trade. We got a double bottom. Boom. But he was too chicken to take it. He's just a big old pussy. I said, okay. Let me convince you to take this trade. 1, 2, 3. Triple bottom, holds up pretty well. We got some bullish candles here. Boom. Then we take the trade on the next pullback and run it up to the orb. Me, I would have been a little nervous here if it pulled back. But I'm constantly drawing the first candle and the second candle and trying to run it up and see where it lines up. I'm not taking this and running it up to there. And I probably would, but in many cases I just try to find the second one and try to match it up. Or if there was a wick here, I would have lined it up with that one and took the trade on a triple bottom. Boom. The wick does hit it, kinda. So yeah, that would have worked. I'm just constantly drawing lines. Sometimes they get so fogged up. So there's your first one and your second one, and look where your exit idea was. There's your 3. Amazon's been in the news here lately. What's that? What is that? It's the 200. That's strange. I don't think I've ever seen that on there. Much better. So I had a big knife here. Take that body. We got a fallen wedge. Well, shit. That's a fallen wedge. Nope. That'll work. So we got another pullback. We don't take the trade yet. We notice we got a nice green candle here, an inverted hammer, and then a hammer with a tweezer bottom. 3 white soldiers to the 21. Then it pulls back and retests. Then there's your entry idea. I would have took it right here off this hammer, because that to me is a very leading indicator with a tweezer bottom. I would have probably took that trade. Tweezer bottom using the bodies. I'm using the bodies. I look mostly at the bodies. When I'm looking at set, body, 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 wick, 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 none of them are consistent. The body, 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 body is. I'm only a few traders out there that I've ever seen that just use the bodies of the candlestick. So many traders use the wick, and they never take trades. I'll take 10 to their 1. We got to break out. The sign was the 3 white soldiers telling me that we were going to have a continuation run, but not to take the trade until it pulls back some. Then we pulled back and had a hammer, and I was willing to get into the trade there and run it up to the 200 SMA and get out of the trade. How important the SMAs are. They work in any time frames. Now, if you would have used the EMAs, I don't know if you'd have had the 200 on there or not, but you see how good of an exit idea using the 200 SMA on that chart was. So we had a great snake. Almost every chart I pull up, I can find a trade in that day. Friday was just a sell-off day. We've had such a huge run for 3 weeks. I called it out. I said, man, we've got 3 white soldiers here. We got to consolidate some. So I'm sitting here looking at another trade, and I want to take it into close. And I'm going to draw out my pattern, draw out my snake again. It's kind of an awkward here, so we'll do this. Not clean. Got this little wedge working. So it breaks out, pulls back, runs up to the 50 SMA, and you're out of the trade, or the 63. Then it comes back again, forms another wedge. Breaks out of the box, pulls back. Boom. We got a triple top. Wick hits it right before close. I'm out of the trade. This is on a 5-minute. So I jumped in on 2 wedges, 2 trades. 1 minute. Breakout, pull back, boom. Breakout, pull back, boom, to a double top. Morgan Stanley. First thing in the morning. Jim, I think we have us a fallen wedge. I learned how to count to 3. You taught me. One, two, three, boom. 1, 2, 3, boom. Sweet spot, fallen wedge. Real simple. Just have patience. We're bouncing off the 200 SMA. We got out of the double top. Say this was the SPX. I just made $5,000 on 3 contracts. I only spent a little bit under $800. Fallen wedge. SPY. So I'm going to use the 1 hour. I don't want to use this chart. So I'm looking down here and Jimmy's called the bottom. I made it very clear. I did a video and I'm going to show you something, how I figured it out. I was trading IWM in the FU Money Club. And I was talking to one of the guys in there, one of the head honchos, and he's got a liking to how I trade. And I showed him where I thought bottom was. But here you go. You got a double bottom. You got a snake with a double bottom breakout, another pullback, another pullback. Look how far that went. I was so in love with this run. So the IWM, another chart pattern that got me in this trade. Using the weekly time frame. So we got a couple tricks up our sleeve with this one here. We were bearish on the weekly because we were below the 200 SMA. Let me have a drink. So we were bearish because we're under the 200 SMA. Now we're bullish because we're above the 200 SMA. Got 3 black crows off the 200 right here to double top. So when we started pulling back here, look at that, ain't nothing compared to what we've seen before. This was nothing. And people were just freaking. So I get up here and I get me a trend line. I spotted a pattern in here. Do you see it? Take the body of that candle, the body, not the wick. Run up to the body of that one. That right there. That's called a head and shoulders. So remember I said on the head and shoulders, when we're coming up, don't take the trade and think it's going to break, because it's going to pull back. This one didn't even hold the neckline. But when it started to come back, Trump deranged syndrome, when he got elected, when he got in office, started cleaning house. So we got that shoulder line, and we broke it. We came back and retested the shoulder. We came back and retested the shoulder. We broke out again. We came back and retested that shoulder line. So that's why I called that IWM. Now we got 3 white soldiers. I got to be very careful this coming week, because I'm thinking we're going to have a couple days of consolidation and then continue the run, or just completely come back to this double top breakout. And that'll be your strong support to get back into IWM. That's on the weekly time frame at 266, and that's, you know, that's a $9 dip. That can happen easily into this coming week and find a good solid support at 266 and run it back up. So that's called a head and shoulders. That's exactly how you look how clean that is. Extend it out, bouncing off the 63. 3 white soldiers makes me bearish for a bit, just for a small correction. It could pull back and hit the wick. I'm so bullish in this market. It's hard to tell people that. Too many people have Trump drains. You know, we finally don't have a politician in the White House. I waited all my life for this. I'm 65. So, let's go through a couple more stocks and I'll be about done. I'm going to read some comments. Vaccine regime is gone. Take the calls at 200. Nice tip. Yes. Hi, Jim. When you say you take the trade on tweezer bottom, do you enter at the same level as the previous low reclaiming? Yes, I'll try to take it if it comes. Okay, tweezer bottom. Let me find one here. Let's say we're looking at this tweezer bottom here on the IWM off the 100, and we noticed the body has stopped right there previously of that tweezer, and it starts to break out and move up, and then this here maybe will start to lower again. I wait for it to be established. Then I wait for it to move on up and then try to pull back some. As long as that bottom is still established, I try to see if I can get any kind of pullback to get a better price. But I'm very bullish once the tweezer happens. Let's say it already established it and it's come up, and I'll try to see if I can get maybe back to the top of that candle where we've had that body and that body right there, and I might take the trade right there, or I might take it off that wick if it comes back down. And then if it comes all the way back down again, I might add another contract or two, double down. But I'm very bullish on them tweezer bottoms. Same as a tweezer top. I want to get out of the trade, especially if the next candle goes below that tweezer. I definitely want to go ahead and take my profit. No, questions are good. How I take puts? Well, I don't take as many puts as I do calls, but I would be looking for tweezer tops. I'd be looking for a triple top. I'd be looking for a double top. I'd be looking for a shoulder line of a head and shoulders. I'd be looking at 3 black crows, 3 white soldiers, knowing that it's going to be a continuation pattern maybe. So I'm more or less lenient, unless, if I get a 3 white soldiers, I'm going to sell it almost 9 out of 10 times, maybe 10 out of 10. And if it, third soldier, I'm going to sell it, especially if I hit a moving average. But if it pulls back, I would expect it to pull back to the second candle or the first candle on that next candle out. So if I was to buy a put, that would be the only time. Then I'd be relentless. I'd still be reluctant, because I usually hold that first candle or that second one. But I'm always out of the trade, so I'm just getting ready to retake the trade. Sometimes I'll just fall back down to that first crow or that first soldier. Like you have breakout here of 3 black crows and it breaks 3 white soldiers. Sometimes it'll pull all the way back down to that support line. But puts, I sell puts. I get into puts with instinct, and I'm looking at consolidation. Like if we hit a triple top and it goes sideways, and I start to see a few bearish candlesticks, looking like a hangman or a shooting star or 3 black crows, a tweezer top. I'm looking at the dark cloud cover, bearish harmony. That's a bearish harmony. If it's down here, it'd be a bullish harmony. So I'm looking at candlesticks, and I'm looking for a chart pattern resistance. Like if it's a rising wedge or a bear flag, a doji. You got a hangman here, a shooting star, gravestone doji at the top. I'm looking to get into a put. This is a bearish spinning top right here at the top. So I would advise you to Google bearish reversal pattern. See 3 white soldiers? Whatever candle precedes the 3 white soldier. And sometimes them things jump up quite a bit, them candles. Shooting star and a evening star, I would call that a doji. Just start studying the candlestick that precedes. If it's a triple top, a shoulder line, double top. 3 white soldiers, I'm almost always out of the trade. Almost always. I'm out. I'm first one out. I don't hesitate. You got a triple top here. That could be almost an ascending triangle, but that's a triple top. I'd be out of that trade. That's a inverted hammer. The same, and then you got a bullish reversal right here. Tweezer bottom. After 3 black crows. Then you're out of the trade with a double top. 3 white soldiers. Inverted hammer. I just tried to look for candlesticks that look like reversals. You got an inverted hammer here. Boom. One that's going up. Boom. Tweezer bottom. Tweezer bottom. Evening star. I'm looking for candlesticks and chart patterns. And then I've got my moving averages in here to get out of the trade. 3 strongest bearish candlesticks. Bearish engulfing, evening star, and 3 black crows. There's a lot of misinterpretations with the 3 black crows. To me, it's the end of the dip. But it can have a continue. It'll go sideways, and then you determine if it's going to be a trade or not. Sometimes it'll just go sideways and then dip again, and you'll have another 3 crows. They could do it 3 or 4 times. As it's doing it, it could be creating a falling wedge. Or it could be creating a snake where eventually it's going to break out of that channel. And the same thing when you're going up, just work it the opposite way. So, for example, I took the trade here off the triple bottom, off the inverse head and shoulders. Here's a good example. So you got an inverse head and shoulders right here. Then it came back and touched that shoulder the second time. That's almost every time, I mean a lot of times, when it comes back and retests that shoulder, boom. So I'm sitting up here, and I took this trade down here, this inverse head and shoulders, off the shoulder the second time. And I run it up, and I scale out the double top. I notice it's still respecting the 21. 21's been its support level all the way up. So as long as it stays above that 21, I'm going to stay in the trade. Then all of a sudden I get a triple top. I get a knock on the door. Man, Jim, I'm up huge on this trade. And I don't know. I just recognize the triple top here with a wick, making it a quad. What do you think? I said, well, triple top, that's a resistance level. You might want to go ahead and take profit. Later in the day, these are all working great. It's working great in the morning, it's working great in the afternoon. And then the end of the day, people are starting to clean off their desk. Fat cats are gone, and the trading cycle changes. You can't pull off the same stuff you were doing that morning and expect it to continue all day long. Now, there's days when I come in here and I say, wow, this is a beautiful, clean day today, man. Everything's hitting everything. I'm having a heck of a time. Then there's days I come in here and I say, dang, nothing's hitting right. The supports ain't holding, moving averages ain't holding. But I stick around, and all of a sudden, something clicks. And everything starts respecting the moving averages or the chart patterns, and I start to pick that up. But when I'm trading, I trade more money in the morning than I do in the evening, because there's less volume. There's not too many people that sit at the desk 8 hours a day like I do for 22 years. where you don't have no butt. So then I've got 4 windows with 16 charts up. And then I got 16 more behind it. So I'm flipping back and forth. And I'm looking for the trade that I want. I'm seeing if there's any knives or if there's any breakouts or if I hit the 200 or if I see like the 21 being respected and then disrespected. So I'm flipping back and forth. I'm constant looking at my 4 windows, doing flip, 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 flip. Looking for that. And they're all great tickers. NVIDIA. Here's, bounced off the 200. 200, 200, 200. Trading is like a basketball. You throw it up in the air. I had a coach show me this one time. Threw the basketball up in the air and it'd bounce, and then every bounce would get smaller and smaller in gravity. And that's the same thing with trading stocks. You might have the biggest breakouts first thing in the morning, then they get smaller and smaller and smaller and smaller throughout the day. So you got to look for patterns to try to get out of that. But then you'll have some kind of news hit the market and you get a big parabolic run. So the first part of the day is the best action. And then I have, like I showed you the scans on Ameritrade, Schwab. I also have TrendSpider, and it sets up, kind of gives me some kind of ideas. Like this is the daily, and if I was looking at the hour time frame, and I wanted to put the heat map on this thing, give me some kind of generation. 5-minute heat maps where all the buying and the bright red. These are showing me chart patterns. I got indicators on here. We got my 200 bouncing off the 200, bouncing off the 200. We got an inverse head and shoulders right there, support level. If we had more time in the day, it could have probably run up to the top. But we've got a Darvis box going sideways. Tesla. So I'm getting double bottom on Tesla. I called that one out. Clorox I never could trade. I got different kinds of scans over here. Alligator bearish, alligator bullish. Upgrades, downgrades, analyst downgrades. Now that looks like a one that's about ready to break out. You got higher lows, rising wedge, I don't know. I can get my news right there. My news is always around. Any triangle break. I recognize when. There was an inverse head and shoulders right here. If I was watching this stock at the time, you got your left shoulder, your right shoulder, and then that retouch. Then you had a big gap up. Man, that would have been a good trade to be in. that right shoulder, second time, is the sweet spot. And that's a wedge or a symmetrical flag. And see how it came back down and touched that wedge? A symmetrical flag. You'd had a trade right there. You'd had a trade right there. What breaks out always retests the old resistance line. Don't ever take a trade that just automatically breaks out. Put it on your watch list. Draw up that chart. And that would have been a great entry. And that would have been a great entry. And keep an eye on the news. Then I got FinViz. If I'm in a low float stock, let me think. I don't know. It's been a long time since I've traded floats. I'll just put something in here. Give me a low floater. I know Nile ain't a low floater, but I can find out what the float is. I mean, that's a lot of shares for Nile. It's had so many splits. Short, how many people are trying in short ratio? Short interest. I mean, that wouldn't be a... I called this down here. So I use FinViz for that, just to look at the numbers here. I don't use the scans that much, not like I used to. So I think that's about it. Anybody have any questions? I probably got a lot more stuff I could talk about. I know I do. I carry on all day long. But it's all about breaking out of that channel and looking for a pattern. Always drawing up patterns. You know, this thing here, that's a beautiful, that NVIDIA, I would have traded that a couple times. AMD is one of my favorite ones to trade. This here's called an ascending triangle. You had a triple bottom on the 20-day. I would have took that trade. This big knife, here's a good example. Here's a good one. Here's a good one. So I've already got the trend line across there. So I know that that's an ascending triangle. And then, but that was later after the fact. So I'm sitting here watching the reversal in the market. And Apple, I called out Apple. We had a double bottom. We broke out. And then we had a knife. And that created a triple bottom. That would have been a no-brainer. If I saw this, I would have took that trade in a heartbeat. Because that's a bullish reversal pattern. There's no ifs, and or but. And I did that on the hour. And I would have been in and out of that trade that day. Or maybe think I could bring it up to a double top the next day. But you see it pulled back. Then you got inverse head and shoulders right here. Left shoulder. We got the left shoulder, right shoulder, second time it touched. So I draw my shoulder line. Jim, we got a big old knife here after hours, and then wake up the next morning and it created a head and shoulders. And then read it open. We got a tweezer bottom all the way up to a double top in that same day. It's how powerful them head and shoulders are, them inverse head and shoulders. Very powerful. I came in and it was bouncing off my 100 for 2 hours in a row. I'd take that and run it up to a triple top. 1, 2, 3, I'm out of the trade. It's that resistance line, right? It's already been established. Come in here and there's the wick. Boom, I'm out of the trade. Respect the 100, respect the 100, respect the 100. I'd have took the tweezer bottom. Then you got a tweezer top. I'd have been out of the trade. Inverted hammers, tweezer bottom. I'd be in the trade. Out of the trade with a triple top on the hour. Or quad. Or triple. That's using an hour time frame. Same trade on the 4 hour, 2 hour. I just put it on the 2 hour here lately. So we got a big falling wedge. Breaks out of the wedge. I came back to next, kept watching it, and then we had a double bottom. Boom! We had a triple bottom. Boom! On the 2 hour for a swing trader. Breakout, pull back, boom! Once you start recognizing the patterns and start really studying them, you'll see how clear it can be. And you're getting in the squeeze. You're waiting for these things to tighten up. 1, 2, 3, 4. If you can count to 4, you can make a little bit more. 1, 2, 3, 4. Boom! Now it's retested, out of the trade. At a triple top, quad top, counting the wick. Head and shoulders. You got a triple bottom here. I mean, there's so many plays to take. In the 4 hour. I want to be a swing trader. 4 hour. You got a triple bottom, quad bottom with the wick. I would have took that trade off that wick. You got all this support over here. Now I'm going to teach you something about a yin yang. This is what I call yin yang. Yin yang is when you break resistance and pull back to that previous resistance and it becomes support. So I've got this candle. I'm going to run a trend line. That's called a triple top breakout. It comes back down, then bounces off the 200 with a double bottom. Past that, and then breaks out again. Then it comes back and holds support off that triple top. Then you take the trade and run it up to a double top. Doesn't have to be perfect. You're still following this trade. You scored. All of a sudden you've seen that it respected the 100 EMA, and you get a knock on the Jim. We're touching that moving average again. It's respected it twice this morning already. Well, what do you got going on there? The market seems bullish right now. You got 3 black crows plus that other one with a tweezer bottom off the 100. Let's take the trade. And we get out after the third crow, third soldier. It's respecting the 21. Another big run. So you draw your resistance line. Damn, Jim, a triple top. I got in at the 21 and held it all the way to a triple top and sold the stock. You got a big fat hammer right here. Bullish. Reversal candle with a tweezer bottom. Boom. Keep an eye on them candles. Learn them candles. Learn what's bullish and learn what's not. Study the dojis. Used to have a thing about candlesticks. I learned Japanese guy years ago. And I never really put much study into it because I was like a trend line trader. I traded horizontally. And then I was on a video doing videos with the founder of Trend Spider. And he come up to me, he said, Jim, this is about 8 years ago. He said, Jim, you're a horizontal trader. I said, what? What do you mean by horizontal? I said, I was only looking at half the picture. I didn't look at things vertically. And that changed my whole view on everything. Double bottoms now became slanted. I started drawing trend lines vertically instead of just horizontal. And I couldn't believe just one sentence changed my trading strategy almost 50% better. After a couple months, I started realizing this. I can't believe I did this for 18 years or 15 years like this, just trading horizontally. And when I mean horizontally is I just draw a freaking price line straight across and wait for it to hit that trend line. And then I woke up after him saying that. I said, damn, I've been missing out on this all the time. Man, I got a yin yang right here. I could have took that trade horizontally on that trend line. And I just went, shit. I can't believe I've turned out all these trades. I mean, I started trading 4 or 5 times more trades a day. Because we bounced off that previous resistance level, which was a double top. I used to look at double tops sideways, horizontally. Now I look at them like a whole different picture. So yeah, just that alone. And adding a 63 EMA and adding a 100. I used to trade with all kinds of different moving averages. They just got better and better and better and better. So that's something that I'll never forget. That learning how to chart vertically made a difference, a huge difference. I know traders that are good right now that just trade hourly candlestick pattern and never heard what a crow was. And then once he seen that, he said, shit, I'm realizing now that I could make a lot more money if I just hung it out a little bit longer, because my supports are always spot on. Okay, well, I've been at it for 2 hours and 22 minutes. Very good, Parv. We all learn from each other. I hope I've stuck around here and you stuck around, and you can always follow me. This is going to be recorded. You can share it if you like. It's long, and I'm always live on YouTube. You know, I don't want to take anybody from any rooms that you're in. I don't do that. But you can always private message me on Discord, and I'll answer any questions you need. And I'm always putting out short videos that are every video I do that's short is a learning lesson, and it just talks about my strategy. I don't have a lot of indicators on here. I just use moving averages, chart patterns, and being in the now. And I use the orb and keep a good watch list. Never stop learning, never give up. Paper trade if you're having difficulty. Don't follow a trade blindly. Know why you're taking the trade. I always ask anybody that takes my trades, do you know why I took it? I'm just not spitting out calls. I'm teaching. I don't care about money. Money means nothing to me anymore. It's just having fun. I mean, I like to play music when I'm sitting here and sing, and after I get out of a good trade and walk away from the desk, come back and see, oh, I got another trade set up. But don't try to, you gotta, to get good, you gotta make some sacrifices. If you're married, you know, you got to make it clear to her what you want to do. If you have kids, they're your family's always your priority. The market, you can trade any way. I mean, there's so many ways to trade the market. If you're a full-time employee, you still can find a way to trade the market. If you have lunch breaks, you might get an hour in there where you can trade the market, but that gets a little risky. If you have meetings and you could be an overnight swing trader, learn how to trade that strategy. You can be an early morning trader, trade pre-market. There's hundreds of ways to trade this market, thousands of ways, and everybody's got their own special way, but there's always room for improvement. Maybe that one improvement will change your whole atmosphere. Heck, I got it, man. I think I can retire next year. I'm only 40. I know kids that become millionaires way before I even thought about it. It pisses me off, but I'm happy for them. So I could sit here and talk all day, but my voice is going to get a little bit hoarse. And I got to eat me a steak tonight. And probably some things that I've left out. But basically, I was just trying to emphasize the importance of the moving averages. And if you haven't been around for this lesson, you can jot these moving averages down, copy and paste it. And remember the chart patterns and the candlestick patterns that make reversals out of a snake. You know, you're looking for things like this, and then you're looking for chart patterns. This was coming, let's say the ascending triangle come out of a knife. And then you want to look at the candlesticks. 3 black crows, I'm 3 white soldiers, I'm out of the trade. And then I start looking for the reversal candle that's going to bring that thing up, because I know that's an extension to a run. You could be in this trade and decide you want to hold it, and that fucker will drop all the way back down to where you began at. Or you could see the 3 soldiers, get out of the trade and buy the dip and double your account. Anything in 3s, that's the sweet spot in my strategy. If we've gone beyond 3 and 4, you might hit number 5 and take a nosedive. You've been in it too long. This is an ascending triangle. It failed. This one didn't fail. But once it broke out of that pattern, them higher lows, it failed. So that's telling you right there to get out of the trade. It could be a retest. I've learned to stay in them, but because usually when I go below that trend line, it just kind of have a fake out, what I call it. And then you get mad because you sold it and damn thing just tricked you. Rising wedge. Copy and paste that. Type in Google bullish and bearish chart patterns. Continuation patterns. Say you're in a trade and it's going up and all of a sudden a flag comes in and you're thinking that that's a bear flag and it's actually a bullish flag, and you decide to stay in the trade, and then you have the breakout and you're going, jolly gee. Bullish wedge and a falling wedge, they're about the same thing. You have a breakout and then it decides to go ahead and wedge on you. Doesn't mean it's going to go down. Or a lot of times when I have a snake and I've got a wedge in there, when both of them are bullish either way. You got your pennant flag, which is your symmetrical flag. You start to see that form. See, I've got my computer here. A little document where I put all my documents. I'm able to go back in here every once in a while and look like what a hard money is. Harmonic candlestick pattern for reversal to the upside, same as one that's up on top. You got a dragonfly doji. Bear flag, upside down pennant flag. Coming down and creates that. Sometimes they'll shoot up when you're coming out of that snake. But if it breaks below that, you might have a second chance down here with that 3 black crows. Descending, bear flag, but a lot of times they'll come back up. It's all about that sweet spot. Stair stepping, parabolic stair stepping. Darvas box, that's called consolidation. And then eventually it's going to tank on you. What goes up always comes down, and what goes down always comes up. Here's the stock that I just got in. I couldn't even get the guys that made millions on it to trade it with me this time. They would have made 50%. AMC, 93 all the way up to 187. I'm up almost 100% on this trade. First time it's ran in over 3 years. 90-day 1 hour. I'm about hit my resistance level. I called a pullback on it. I did a video on it. So we're going to pull back and hit this number right here. Perfect. It was perfect. My goal is to get to 204, and I'm about there. I sold some because the run that I've had, I just didn't want to throw away all that money. But this stock has been a shithole for years. It ain't done nothing but go down, 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 down. They got all these AMC pumpers pumping this stock from here. It's going up, it's going up, it's going up, it's going up. No, it ain't. I told them all, wait for a buck. 3 years ago. Then we hit a buck. And I'm telling them to buy. It's not going to go a lot, but I mean, AMC sucks. Hollywood sucks. I haven't seen a movie in years. I can't stand the snobs. I was going to be an actor when I was younger. I mean, I really worked at it. And then I just got to thinking, man, God, I don't want to be around this trash. Being in the now. Plus, it's been so manipulated and it's so far in debt. And the share structure sucks. But I still traded it. But I waited 3 years to trade it. Looking at it every week. Here's one that I used to trade a lot, Mara. Bitcoin starts to reverse. This thing stopped at 666. You couldn't ask for a better support level. Double bottom. I mean, this was a no-brainer. It's up $5 already, $4. Coming up to my moving averages. Coming up to what I call a wall. Riot. I used to trade the heck out of Riot. Now this thing's running better than Mara. It used to be just the opposite. So keep a watch list and make it stocks that you've done well in. And go over them every single day, 2 or 3 times a day. Here's one of my, just off the top of my head, I'm going to chart Tesla. First, I want to go to the yearly. We had 3 white soldiers. What happens after 3 white soldiers? We consolidate. We had a tweezer bottom. And this thing is at 110. We had a tweezer bottom. I tried to tell everybody to jump in this trade. But I couldn't get nobody to do it. And some of them did, and then they got burnt, and then they got pissed off at me because it went down to like 105. And then it ran all the way to $500. I told them, I said, this is that support. We got a tweezer bottom on the yearly candlestick. And then I pulled up the weekly. We had a lot of negativity with Elon Musk taking over Twitter. The stock pulled way back to 138. We had an inverse head and shoulders. I tried to tell people, we got an inverse head and shoulders down here, man. It's ready to buy. And everybody down on him taking over Twitter. I said, this is the best thing that ever happened because I was censored. And when he bought Twitter, I said, man, this is great. I was censored. StockTwitch censored me. Facebook censored me. Making fun of Hunter Biden and Bob, whatever's in charge of Disney, the one that Elon Musk told fuck you to. That's when I decided to go ahead and buy Tesla. And they were bashing it. The media was bashing it. When I first started trading Tesla 18 years ago, back in 2015, 16 years ago, I thought it was longer than that. Nobody wanted to buy Tesla because they wanted to buy gas cars. And I wasn't even thinking about the electric car. I was thinking more about Elon because this guy's a genius. A lot of people buy companies on just because of who's in charge. But I don't do that. I don't. If you're a liberal and you're in charge of a business, I'm not going to be as, because I just don't trust liberals. But you got to do with what you do. Your gut and you get a gut feeling after a while. It develops, and it just comes just like. Takes 28 times to form a habit. It takes a lot more to learn how to trade. But eventually you're going to get a gut feeling about things, about your strategy. See, like right here, Tesla. I'm pulled up the weekly time frame. I took a lot of trades just off the weekly. And if you know chart patterns and moving averages, you got an inverse head and shoulders here. Then what happens when Trump syndrome comes in, we have a big pullback, and we land right on that right shoulder to take the trade. This went on for almost 2 months and scalping the crap out of it. Inverse head and shoulders. If this thing ever pulled back down to 274, hit that 200, I'll throw a bunch of money back in it. We got news coming out with earnings here soon. It's that simple. Shoulder line. Look at that. The shoulder line, left shoulder, right shoulder, right shoulder, right shoulder. Trend lines, they follow in pretty good. Resistance, 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 and resistance, and finally broke out. Then came back and retested that shoulder line again. Double top out of the trade. I mean, $500. Then it dipped down 150 during this last downtrend to the 100 on the weekly. 100 EMA, 100 EMA. Boom! Zoom out. Follow trend lines, patterns. Okay, I think that's about it. I really appreciate you all, the retail traders community. I'm going to play another song and call it a day. One of my favorites. Be sure to follow me and hit the like button. This will be recorded if you want to watch it over in your sleep. And go back and watch all my videos. And I'm gonna go and been on a making sardine kick lately. Sardine patties out of a little waffle maker, like a fish cake. God, they're getting better and better. I put some cilantro in it and paprika with garlic powder and onion powder and salt and pepper, and not too much salt. There's a lot of sodium in sardines. And then almond flour, mix it up with Parmesan cheese. And I put it in a waffle maker and make little cakes. I'm loving the heck out of it. Everybody have a good day. Be kind. Don't drive drunk. Try to make up with someone that in the family that you don't get along with. Just throw it out there and see how it works. Try to forgive and forget, unless it's real bad. Then you can have revenge. So I'll catch y'all later. I really appreciate y'all. Make sure I have this down.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly Carolyn, still the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Burps get so loud the neighbors say that boy ain't right. Bull or bear, calls or puts, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his old washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic Jim.
Yeah. All right. Yabba dabba doo. I'll see you